Hey, Bill Burnett, just want to let you know that things are changing drastically every day. It's crazy. Market's insane. I haven't seen this in for 40 years of mortgage and real estate experience. But I just want to give a quick update. Last time we spoke on the video, we were looking through some great volatility with some liquidity issues with the banks that got straightened out by the Federal Reserve. We were at 3.25% right here. And just to kind of give you a perspective on these market moves, uh, this is a big move, this green box right here. That's a big move for a day. Look at what we've been seeing. I mean, just extreme volatility. Here, 300-point swing in a day. That doesn't sound like much in the stock market, but 30 basis points to 40 basis points is a huge swing intraday in our market. These are 300 and 400-point swings. Crazy. Um, So here's what happened last week. The Federal Reserve bought 50 billion with a B dollars of mortgage-backed securities every day last week, and it caused the mortgage-backed securities to go up in price because they were taking a lot of paper out of the market, which is normally a good thing in a normal market. It drives rates down. So as the mortgage-backed security prices go up, rates go down. Awesome news, except the Federal Reserve was doing what they thought was a great thing. And you know how I feel about the Federal Reserve. I'm on video and recordings for years now. They overshoot and undershoot. I just sometimes I don't understand how the Fed works, but um, basically that's normally a good thing in a good market, but it was crushing the mortgage market. I mean, here we have volatility. I mean, we have, like, for example, volatility would mean that you can't find a jumbo loan anymore. Anything above, in our area, in the Northern Virginia area, anything above 765, 600, good luck. FHA credit score requirements have gone from 580 to 640. Um, that's crazy. Rates are high on every program artificially. The big culprit was capacity last week. Now we have another big risk factor. The unemployment number came out today, and people anticipated. I think it's kind of baked into the market already. The market didn't react very much to a pretty bad number. We were up 280,000 jobs, new jobs created for the past 2 years. Been rolling right along. And the market was expecting about minus 150, so to go from 280 on the plus side to minus 150, that's a lot. It was off minus 700. So market got that one way wrong. But now that brings another risk level into the market. Lenders don't want to give a loan out, and then a week later you're no longer working. So they have put that risk, built that into the market as well. Any of the outside the box programs, what's called non-QM, they're gone. So it's getting kind of wacky out there. Now there are some lenders who have started to shed off some of the volume. So on the capacity issue, that's getting better. So it's going to come back. It is going to come back. Anyway, a lot of us in the insiders in the industry were putting it on the street to any place we could, any influencers, any contacts we had to the Federal Reserve, to tell them what's going on here. And so what was happening was, as the mortgage-backed securities rates go up, lenders, when they lock in an interest rate, they are basically guaranteeing that rate for a period of time to a consumer. And so what they do, if you watch the movie The Big Short, is they short the mortgage-backed security market. So as long as we are going in this direction, downward on the pricing of mortgage-backed securities and rates going up, they're in good shape. Unfortunately, with the Federal Reserve, doing the buying, they pushed the mortgage-backed securities up. So anybody who's playing the short on the MBS is being caught in the wrong position, and it's way out of whack as the Federal Reserve kept buying. So what's happened is a lot of these servicers and lenders have been getting a call. Hey, look, you shorted this in the markets, playing on the downside here. We're way upside down. You're on the wrong side of this bet. We're making a margin call. You probably saw that in the movie The Big Short. And so margin calls came in. Lenders and servicers needed to immediately put out cash to cover their short. And of course, they're going to make the money back when the loan eventually closes. But in the meantime, they're got a big cash shortage there by having to pay off the margin calls today, now. So the Federal Reserve finally heard our word, and they have started buying half. Instead of buying 50 billion, they were buying 24 billion. The next day they came out and they said they were going to do 40 billion. They did 24 billion. So they're cutting way back. This stability right here has caused the short problem to go away. So that's going to help things get better a little quicker. As we look here, when we were down here in this range, right around here, we were at about, I would say 3.5, 3.375, 3 and 3/8, somewhere in that range. Here we were at 3 1/4. It's a 150 basis point swing. You can see this was 3 1/4 where we are now. Certainly right here, we were at 3% on a normal market. We're probably easily at 3 1/8%. So all-time forever lows. This was the all-time low. We finally hit it at 3 1/4 when we reached in here. So rates are expected to continue to be low like this for a while. We're going to see some probably sideways move in the market, and the Federal Reserve will get in there and do what they need to do to keep it there, so that when this capacity goes away, we have the ability to be down at those low rates again and start the refinancing and provide a little more availability to buyers on the purchase side by relieving some of the really strict credit score requirements, debt ratio requirements, all the other things that have been piled on here. So I just want to kind of reach out to you and let you know what's going on. If you have any questions about the technical side of the market, or if you are looking to refinance, or if you are looking to buy or know anybody that is doing refinancing or buying, please have them give me a call, 703-598-4198. Bill Burnett. Hope you have a great weekend. Talk to you very soon.